Market is driven by buying and selling. The reason for all the moves you see in charts is caused by traders who are buying and selling assets from one another. When it comes to Forex, the one I trade, there are two main participants. There are retail traders, which is the individual trader like you and I, and there are institutional traders like banks, hedge funds, big companies, and so forth. With the individual traders, that is the retail traders, we only make up of a small amount of volume in terms of moving the market's price. But institutional traders are the bulls that brings the big move into the market. If institution is buying, we see the market price move up with high volume. Same thing goes to when they are selling. We see the market price decline with high volume. The reason for all these ups and downs all comes down to supply and demand. When there's a high demand for an asset, we see the price go up. We see supplies being bought up. Same thing goes to when the demand decrease, we see the price go down. Let me explain in a simple, clearer way so you do understand. Let's say, for example, I have 5 Lamborghini Urus. Remember, this is just an example, not like I have any Lambo. Oh wait, let me use an affordable example. Let's say I have 10 eggs to sell, but nobody wants to buy it from me in the market. I'll be forced to reduce the price of my egg in order to make a sale. Let's say something changed. One day I came to the market. Now the eggs are in high demand. People will be rushing to buy it from me as fast as possible. So at this point that people are rushing, I can decide to high my price and people will still buy it because they need it. Now here's the thing. Anytime one of these eggs are being sold off to the market, the number of the egg supply remaining falls and I can keep increasing my price. So high demand of something means low supply because I'm the only one selling it for now, which can increase price. Now let's say another random person just land in the market with 50 more eggs. Now the eggs are no longer rare and people might not be interested in buying much again. Now the demand has fallen and supply has increased. I don't know if you understand. Supply has increased, people are no longer interested, demands are low. Price also falls because now we are debating, nobody wants to get stuck with the market, everybody wants to sell it off. So that's the basis of how supply and demand moves the market price. And back to Forex market, the thing I just explained right now is pretty much what happens in Forex world. Supply and demand zones often are in area of consolidation before a large move to the upward side or downward movement. In a real chart, the supply zone is being seen as a premium level to sell out, while the demand zone is being seen as a discount level to buy from. For an example, you bought a wristwatch for $1,000, then the price goes up to $1,500, and the $500 on top is what you see as a profit, while you see the $1,000 price you bought it as a bargain on. Meaning if price get back down to $1,000 again, you might be looking to buy more. Same thing goes to premium. For example, the price hit $2,000 after you bought it. You might be looking to sell it because you've doubled your money. I don't know if you understand. Now when the price comes down to $1,000, you see it as a discount price to buy from, you buy it off. When it goes to $1,500, $2,000, you see it as a good price, premium price to sell from. You sell and wait for the price to fall back again. If it falls back to $1,000, you'll be comfortable in buying again. Do you understand? That's exactly the mentality of Forex market, and that's how supply and demand plays in market. Price pull back to demand zone, you look to buy. When it pulls up to supply zone, you look to sell.
Now let's go in more details. Supply and demand is seen as a zone. Just like I said earlier, specifically, it's a consolidation area before a large movement to the upward or downward side. But there is a logical way to identify and plot them in a real chart. Where I see a lot of people mark out supply and demand, in demand case, they always tend to use the last bearish candle before the large movement to the upside. And for a supply, they always tend to use the last bullish candle before the bearish. But for me, that's not how I trade it. That's not what works for me. So let's talk what works for me. So for a bullish move, when we get a bullish move like this one, it's always going to feature candles like this one. This is the last candle before the large move, the impulse move. And this for me is my indecision candle. Now here's my logic. If we are to trace where buy decision was made before the volatile large move, that is this one. This candle is the only candle that can tell us, because this was the last last point of move before the significant buying move take place. So this candle in court will be our only eyewitness, and by using this candle for this contest, let's call it the eyewitness candle. By using this candle, we will be focusing on the main area where the large move happened. You grab. So that's how I trade, and that's what I will teach anybody that wants to learn from me. Now on the real chart, let me explain this further. As you can see, this particular candle here, this is the indecision candle, because this is the last candle before all these big moves here. Now let me break this a little bit more down. As you can see, before this implosive move, we have some kind of bearish candle here, and this bearish last candle has some kind of rejection above, telling you that buyers tried to push market up from there, but sellers came in and the price was still being dragged. Not until this green candle was formed, where the institutional or the big move was decided, and after that we had this implosive move, all this impulse movement. So how this concept will go, how this concept works is, because this particular zone has once been seen as a discount zone to buy from, that means if we get a pullback to there again, we might find interest, we might see buyers that will find interest in buying this market again. If you remember the example I gave you earlier, exactly that's what I'm saying here. If this market pulls back here, buyers will be interested in buying again, because yeah, it's in a good price for them. And now we know that, now we will likely be seeing price being pushed up by buyers from this particular zone. So I hope this explains the concept of a demand zone. We only want to buy from a discount zone, which is this particular place. And for context and realisticness, this is a trade I actually took this week, and it was a profitable trade. So that's the reason why I'm using it for this example, because I used exactly the sense that this same concept I'm teaching you was the same concept I used to catch the trade. So let me just run you through this trade right now. Let's see how its market reacts when it gets there. You see, we got a tap in there, and market started pushing up. Same concept applies also to supply zone. If this market was on a clear downtrend, then we'll be looking to sell from a discount zone. Hope you understand down. If you don't understand anything, please do not forget to always leave me a comment.
Now, the concept of supply and demand works well with the trend. Let me explain with this chart. As you can see here, we are on a clear uptrend, and the market shifted right here because we had a low here, we had a lower high here, we came out from the lower low, then market shifted from making lower highs and lower lows to making higher highs. You see, this shift in the market validates a bullish shift. Now, after this higher high, we made a higher low, we made another higher high and higher low. So as you can see, this market is on a clear uptrend, and remember, when market is forming higher highs and higher lows, we only want to buy from demand zones and not to sell. So in a clear uptrend like this, we should completely ignore any form of supply zone to sell from. As you can see here, there's a lot of supply zones to sell from. We have a supply zone here, we have another supply zone here. We have supply zone pretty much in every place in this market, but we are going to completely ignore them. We can only use them as a target for a take profit, because as you can see in all these supply zone, none of these supply zone holds, because the market is clearly on an uptrend. So no supply zone here we hold. As you can see, this one, it danced a little bit, but it didn't hold. If you don't understand how to identify a trend, watch my previous video on how to mark out market structure. So we buy only from demand zones like this one, and the rest. Only demand zones when the market is on a clear uptrend. Same thing goes to a downtrend. If we see a market that is making a higher low, a lower low, a higher low, lower low, and a higher low, this is a clear downtrend, and we only should be looking to sell from supply zones and to also completely ignore any form of demand zone right here. We only want to sell from supply zones like this one here, and ignore any form of demand zone that will form in the market. Like here we have a demand zone here. We only want to sell from clear supply zones like this one. So when a market is on an uptrend, you look to buy from demand zone, and when it's on a downtrend, you look to sell from supply zones and ignore every demand zones. Hope that is clear. Now, there's a way to identify a valid supply and demand zone, I mean the candle, the supply and demand candle. When plotting a supply and demand, you should always consider a candle imbalance and efficiency. Let me break it down more. Now, you know, when it comes to supply and demand, you should always trade with the trend, but it's important you know the right candle to mark out and trade from using the imbalance candle. Looking at these two similar candles, tell me the difference you notice in the two of them. Now, notice on the left side we have a candle with a long wick that has met this demand candle area before going up, but unlike this one on the left, this one at the right side doesn't have any form of retest or wick that taps into this our demand area. So this gap, the gap between this candle and this candle, becomes an imbalance. Coming to this other side, you can see this other side didn't feature an imbalance because the price has retested this demand candle here before a push up. But on the other hand, we have an open price range which demand zone haven't been retested yet. So when looking for a valid supply and demand zone to mark out and trade from, look for things like this and not this other one that has already been retested. The reason we don't mark out and trade from the tested area is very simple. Supply and demand zones are only meant to use once. It's a one-time use, meaning market only has to tap on it on the zone only once before it becomes invalid zone for us. You understand? So market only has to tap on it once, as it just did here, before this zone becomes invalid for us. So we only trade from zones that hasn't been retested, just like this one right here. We have this imbalance. So anytime you want to mark out a supply and demand zone, always remember this thing I just taught you right now. So right now, let me take you on a real chart. So we see supply and demand plus imbalance play in action on a real chart. So first of all, let's read this market structure. You see this market had a high here, we came here, we formed a low, we came here, we formed a lower high, we came here, we formed a lower low. Then after this lower low, market shifted in structure, we came here, we formed a new higher high that took out the structure. So with this in mind, with this structure shift right now, we already know that this market is no longer bearish, because we'll start seeing market making higher highs instead of making higher lows. We see a market have broken the structure, validating a bullish reverse, meaning we should no longer be looking to sell this market, but rather buy this market from demand zones. And just like I said earlier, when market is bullish, you shouldn't be looking to sell from supply zone, rather you ignore it. Because if you look at this chart right now, you can see we have some supply zone sitting right here, we have a supply zone here, and we also came here, we had another supply zone here. But are we going to be trading this supply zone? Well, if you've been paying attention, then you should know that the answer should be no. Because why? We see a market that has shifted in structure from bearish to bullish. So right now, we shouldn't be paying attention to supply zones, because we know there is high chance that it will not hold, because this market has made it clear that it has reversed to bullish with this break of structure that broke into a new higher highs. You don't want to trade against the trend because it is not a high probability. So with that being said, all we should be looking for right now is opportunities to buy this market in demand zones. You understand? So we'll be looking for demand zones to buy from. Now pay attention, this is where this thing gets interesting. If you look at this chart right now, we have several in demand zones we could potentially be buying from. We have one demand zone here, which this demand zone is the demand zone that pushed us to a new high. We have a demand zone here, because this demand zone was the demand zone that pushed us into a new high. Are we going to be taking trades from this demand zone? Well, the answer is no, and this is the reason why I say you should pay close attention, because this is where this class gets interesting. Now, if you haven't watched my previous video on inducement, you should better go and watch it right now. We are not going to be taking buys from that zone, because we have another demand zone sitting right at the extreme. At this point here, we have another demand zone sitting at the extreme, meaning we still have some imbalance sitting right here that market has to fill. So for that reason, this number one demand zone is invalid. We had our consolidation here before an impulse move. Remember I told you that's where we find demand and supply zones mostly. This extreme demand zone is where we'll be looking to trade this market from. Let me read this chart again. Remember, we are now forming new highs, because we had our last lower high there, had the last lower low here before market broke that lower high and forming a new high. So after that, this new high was created, we got a pullback again. This pullback didn't come back to break this high, so after this pullback we had another new break. With this new break, we'll be looking for new opportunity. So let's use another example. Now before we move to this another example, I want to clear something about this particular particular demand zone that I just marked out. If you look closely here, let me delete this. If you look closely here, you see that this demand zone candle was kind of small, and the one standing next to it has a long wick. So the reason why I marked it all the way from that demand zone to the longest, to that long wick, is in case if market wants to do another wick out, so we don't get taken out from the market. With that being said, let's go to the next example. So on this next example, we see that in this market, after creating this higher high here, we came and broke this structure, forming another higher high at this point right here. With this new high here, gives birth to another new opportunity for another trade. With this new opportunity right now, I'll be marking out my demand zone. Remember, we mark the last candle before the impulse move, and you see this is the only demand zone we have here. We don't have any other unmitigated demand zone beneath this place, making this place another high. So now listen, this particular demand zone actually met up with all the concepts I've been talking about since in this video. As you can see here, we are on a clear uptrend, and we have imbalance gap between this candle and this candle. Market broke structure to the upside, and also we don't have any other imbalance beneath this place. So all of those solidify this. I don't know if it's all making sense right now to you. Right now, let's discuss on how to use supply and demand as entry and as exit. This is how using supply and demand for entry and exit works. Right here we have our entry with a demand zone. Now let's look for our exit with a supply zone. Now as you can see here, if you look at the left right here, you can see we have a supply zone right here, the first supply zone here, this supply zone here, but this supply zone here has already been met by this move here, so I'm no longer interested in using the supply zone as my target, so I'll be deleting it and be looking for the next supply zone that hasn't been mitigated, which is this one right here, this place here. So if I'm going to be taking a buy on this trade, my entry will be down, will be just here. My entry will be just here, and my take profit will be at this next supply zone. You understand? So my trade will look something like this. My entry will place in a buy limit order here, and my take profits above. My SL will go beneath this place. Now this is how I like to mark out my SL. I always like to put my SL at the nearest swing low. Now let's read the substructure of this market here. Now you see here we had a low, we came here from the high, we came here, we formed a lower high, we came to this place, we formed another high, came here from the low, we formed another new high here, and we formed another low before the new big moves. My SL will just be beneath this particular place. My SL will be at this place, at this swing low here. That's how I actually like to place my SL. I don't know about you. If you like, you use my method. So my trade is going to look just like this. Demand zone for entry, supply zone for exit. So right now, let's see these two concepts play in action. Demand zones for entry and supply zones for exit. And as you can see, this trade was a very smooth trade, and it also pushed us into a new high, which means we can still continue trading this trade. We can still continue buying this trade as long as markets keep creating higher highs and higher lows. I hope this makes sense to you right now. If you'll be using supply and demand concept for your trade, then you should also understand the concept of inducement, liquidity. You should also know how to approach them. I made a video about that in this channel. You can go check it out on this channel. I took my time this week to make this video, and in my next video I'll be talking about how to use a refined supply and demand entry zones and double confirmation pattern, so you can make yourself more profit while risking just a little amount. And always have this in mind that it's not about what you have, but what you do with what you have that always separates winners from losers. Protect your capital at all costs, control your emotion, try your best, and stay away from unhealthy trades, because what makes you professional is not about what's happening to you, but how you control your response. If you watch this video to this end and you liked it, I want you to leave a comment. I must succeed is Jeafx, because I'll be dropping more video. And do not forget to like and subscribe to this channel. Help us grow this channel. See you next time. It's your boy Jeafx.